Investors in art beware. Challenges are galore. Art deserves appreciation, however, not every work of art appreciates. Here are some caveats for the so-called artful investors. Art as an asset class hasn't yet arrived with a bang. Because values of artworks are influenced by subjective factors like viewers' perception. This is quite unlike other asset classes like stocks, whose values are set by intrinsic worth. So just a few artworks are good investments, and it hinges on hundreds of factors. Yet begin with evaluating an artwork, not its aesthetics, but its potential as an ideal asset class. Look at the artist's history, and how his artworks have performed so far in the art market. Assess the artwork's potential for capital appreciation. From selecting the right artwork of the right artist to analyzing his past performance, get all details. Check out how long it took for the artist to gain acceptance and appreciation. Today you have excellent search engines. Also, plot a perception graph for each artist to know the trend in his acceptance levels. Many art investors say they like art as an asset because it offers them diversification. There is a catch here, however. The art market is different from the stock market. One reason why art as an asset suffers is its low protection against economic upheavals. That means art as an investment calls for greater risk management. Artworks offer aesthetic pleasure to human senses, but that has more to do with perception, not money. Over a period of time, positive perceptions can help art buyers make money, but chances are few. That makes artworks collateral asset classes, not primary investments. Reason why most art buyers pick up artworks not for investment needs, but mostly for their aesthetics. As a hedge against inflation too, artworks are not good enough. Only select artists qualify. Meanwhile, tastes change, perceptions alter, and worse, more creative artists can replace established artists. In that case, any art would lose its appeal as an asset class. The hardest part of art investing is doing the background work of tracking an artist's history. Worse, there are no exchanges for trading art like stocks have. What more, laws of demand and supply do not apply to them. Rarity determines the market value of an artwork. But, rarity again is a matter of perception. As there is no art market, continuous valuation of artworks is not happening anywhere. So, most of the time they are overpriced. They may lose their prices as fast as they gain them. That makes artworks a bubble for serious investors. Mind you, exhibition centers are not art markets. Moreover, artworks get neglected during economic downturns. So artworks are largely illiquid. Above all, forged and counterfeited artworks are major issues. As AI invades the art world, there are AI-generated artworks and deepfakes now. This is a big challenge today for investors in art. Investing in art is not just about having a keen eye for beauty, or a knack for spotting the next big thing. It requires meticulous research, a deep understanding of the market, and a cautious approach. When you decide to invest in art, you are not merely purchasing a piece of creativity. You are entering a complex world where every brushstroke, signature, and provenance document can affect the value of your investment. Be prepared to navigate through a maze of galleries, auction houses, and private sales. Vet your sources, consult experts, and never rush into a purchase. After all, being artful means being careful. Only then can you truly appreciate the dual rewards of aesthetic pleasure and financial gain.